the big headline the last week was that because of the sort of subsequent or continuous increase in repo rates, we have seen the loan tenures, which is for the benefit of our viewers. Basically, it means that if you take a home loan, how much time will you take to pay that back? Your loan tenure. In some cases, it has gone up to 50 years. So, for example, if you're taken a home loan in your 30s, you could potentially be repaying that loan into your 80s. Could you sort of explain, particularly in relation to home loan tenures and the increase that it has seen, and what's the sort of outlook going forward?
No, say outlook all depends on Reserve Bank of India's policy. I mean, whether RBI will stop here or whether RBI go for another 25 basis point, and that will be the terminal rate. That's 6.75. We need to wait and watch. So that's wide open. ECB has already raised hike its rate. US Federal Reserve at hike its rate, and I would like to believe that Bank of England also will go for a hike. Now, can Reserve Bank of India afford to not to do this, or RBI will do this? Because our inflation again at continuously for 10 months it was higher than the upper band of the inflation target, and because of that Reserve Bank of India had to actually give an explanation to Parliament why it happened. It's a closely guarded secret, even no RTI could find out. They refused to part with the information. We are very interested to do what is RBI's, how does RBI want to maintain, I mean, what kind of commitment it's given to keep it within 6% in future. And if you see the Reserve Bank of India is not saying, at least till the last policy, that it will be cool within 4%. It talks about pretty high, less than 6%, but not in 4%. So will RBI stop here or will RBI go for 25 basis point? That's a separate debate altogether. It depends on that. Meanwhile, home loan rate was the lowest ever, if I'm not mistaken, before the rate cycle started. There are some banks who are given at 6.25 even home loan. Now what happened from 6.25, if your loan rate becomes say 250 basis point more, which means 8.75. So certainly you can see the percentage of how much it will go up. Now, depending on your capability and whether you are a businessman or you are a daily wage earner or you are a salaried class, so on and so forth, it depends on whether you can service the higher loan or you don't service the higher loan, you continue to pay the same EMI, that's the equated monthly installment, but then your portion, your maturity profile goes up. 10-year loan can become 15 years or 20 years. Essentially, what happens is this: if you and I take home loan, at the initial stage, for every 100 rupee I pay towards the EMI, probably 90 rupees goes for interest and 10 rupee for principal. And as we proceed, it goes down. And towards the end, towards the end of 10 years or 15 years or 20 years, that happens, we are servicing more the principal and less interest. Towards the end, very minor interest, only principal. But if because of the interest hike in interest rate and I choose to lengthen my maturity profile, then what will happen? I'll keep on giving the interest, not the principal. I'll not be able to principal. And I doubt whether actually banks will allow anybody to have, theoretically it's possible 50 years, but where is the cash flow for me for 50 years? Even if I take money in my early 20s, typically the age of retirement is 60, 65. If you're a bank chairman, 70. but then how would anybody can give 50 years maturity? So it's not. So it depends as it pans out. But again, as you said, that then don't get scared. It's a rate hike cycle. But all even in US, people are talking about next year we'll see rate cut. So even India also, as we find the rate cut, then again it will even out. So we need to see how the cycle moves. Let's not scream and get scared that it becomes 50 years, because it's not that interest rate here, wherever we are, it's going to stay. Few months down the line or a year down the line, the cycle may change and we may see the interest is going down. That's true everywhere. Like US people have started talking about earlier, they talk about in this calendar year itself we'll see the reversal, but now they are talking about no, probably it will take time. but US Federal Reserve will reverse the cycle. In same is the case with India. We'll see if the growth is affected, too much of rate tightening, then the RBI will have no choice but to. Of course, there are multiple things to take care of. One is inflation. Other is, of course, RBI will not officially accept it, but the currency. What is the level of currency? Again, if our interest rate differential is too much with the rest of the market, rest of the world, then our currency will be under attack. So one of the reasons we need to raise interest rate also to protect the currency, which Reserve Bank of India will never say officially. Their official stance is this: we always want very smoothening thing. We don't want any kind of disruption. We don't care about the level of currency. That's the official stance. But heart on, hand on heart, in
Right.
private, people say no, we do care for currency, and that's also one of the contributing factors when the rates will rise. So in sum, nothing to be scared of at this point of time. I think we will actually sort of exerting the entire fear now, because the rate hiking cycle is not here to stay, and it will change. Once it change again, the things will change. I mean, the interest rate will go down, so it will even out. We need to wait and watch, but at this point of time, yes. For the record, even though typically home loan rate is home loan tenure is 20 years, but you ask any bankers on the bank's book, average home loan tenure is 6 years. Why? A, you and me, often we pay off, but still is there like gold. When you mortgage gold, you, the first priority in India even now is just get back the gold first thing.
Right.
You generate money and you get back, even though you were taking 2 years loan, but maybe 6 months or 8 months time, you take the gold back to your locker. You don't want to part with your gold. Similarly, for home loan, all of us, the employed class, the salaried class, we want to pay off fast so that loan free thing and all. So the average maturity is 6 years, because people do service the loan faster. Whenever they get extra money, they do. And also they shop. They shop in a sense, from bank A they go to bank B or bank C, looking for lower interest rates. So there's arbitraging always happens. So in the bank's books, typically, even though it's 20 years, it's actually 6-year maturity profile for assets. So I think this 50 years theoretically is correct, and yes, theoretically we'll keep on paying the only the interest, not the, will not be able to touch the principal. But this based on the presumption that interest rate will continue to remain high, 6.5 or even more. But Smitha, and we know that the cycle will change. Again, it will come down and things will even out. So let's not overreact to this.